with you might actually be some great news for Bitcoin investors and traders, especially for those of you who are looking to perhaps hold Bitcoin for the long term. So let me just explain to you what it is that I'm going to share with you. You see, in a previous video, what I said to you was that if Bitcoin takes out and closes below this support level, so here's our support level, and here's why. This is the February low, and this is the April low. And as you may remember, in a previous video, I said to you that if Bitcoin falls below this major and important support level, this February, April low, which is about 6,500 to 6,000 level, okay? If we fall below that level, that essentially would be terrible for Bitcoin because that is breaking market structure and could lead to significantly lower levels. In other words, significant sell-off in Bitcoin. Now, having said that, I want to show you in this video why there is an exception to that rule. Let me explain. You see, yesterday I was looking at the chart of Bitcoin from 2013 to 2014. And here's something important we can learn from Bitcoin's behavior from a few years ago. You see, back in 2013, which I'm sure many of you remember, in that year, especially in November, from about October to December of 2013, as you may recall, Bitcoin did something very similar to what it did last year, which is it went up nearly 1,000%. Bitcoin skyrocketed from about $150 in October, November of 2013, and it went up all the way to just above $1,100. So again, about 1,000% move. Now, you'll notice what happened next is very similar to what happened in December of last year, in 2017. You see, in December of 2013, Bitcoin had a very sudden drop, or crash, you want to call it that, then a rally, and then another drop, okay? And it continued to do this until it finally made this bottom in December of that year, okay, around about the 400 level mark, okay? And then it staged a very strong rally. Now, I want to just mark that level there for you. Let me just, so what I'm going to do is I'm going to grab a line, and I'm going to place a horizontal line right about that bottom there. Okay. All right. So there's our low from December of 2013. And then after that rally, which failed, okay, notice it came back. Now, it did have an intermediate drop below the level, and then it went up again. But notice what happened next. In February of 2014, it came back and retested that level. There it is. And notice it held that level. All right. So in other words, about a few years ago, Bitcoin made a low or a bottom back in December of 2013, and then it retested that level in February of 2014, forming a sort of double bottom pattern. Now look what happened next. About a few months later, in April of that year, look what it did. It broke below that significant level. That's, in other words, it's breaking market structure here. But notice what happened next. It quickly recovered and went back above it again. Now, is that significant? Yes. And I'm going to show you why it's significant. You see, guys, in technical analysis or chart analysis, that is what's called a false breakout. And a false breakout is one of the most important and most significant chart patterns you'll ever see in the markets. And they happen more often than you might think. Remember, guys, a false breakout of a support level is by far one of the most important and most powerful buy signals you'll find in chart analysis. In fact, let me show you exactly what happened after that false breakout. Okay, so let's take a look at what happened next. So just to put it into context, there's our 2013 low, the 2014 low, draw a line across it, okay, like so. And look what happened here. You see, there it is. That's the false breakout. And essentially the market here is, what we're seeing here is a break of market structure. Now, it is true that breaking market structure is a terrible thing for that market because essentially you're breaking key support levels, which leads to significant sell-offs. However, there is an exception to that rule. The exception to that rule is when you see a false breakout. And what you see here is a pure and perfect example of a false breakout. Because what is happening here, and actually, by the way, guys, a lot of this is happening due to algorithmic and bot activity. And guys, it is important for you to remember that a lot of market activity today is not done necessarily by actual investors and traders, by human beings, but they're done by algorithms and bots designed and created by institutions and big market players. And I personally think this is a pure example of it.
So I'm going to go ahead and wrap this up. The one thing I am going to immediately just start with is if you haven't had a chance, please subscribe to this guy, Alessio Rastani. Great, great. Like, I love his channel. I learned so much. And like I said, I don't try to do any kind of technical analysis because I know, and I do have an MBA from USC and my broker's license in real estate. But what I learned when I got my master's in business is stick to the experts and learn from the experts. So he provides great information. And a great thing that he brings up is the bot trading, why I highly am against day trading or doing any kind of quick in, quick out investing, because you're not going to beat the robots, and it's a casino and you might win a couple of times, but eventually most day traders end up losing unless you have a computer or you have some sort of insider information. If you do, then go ahead, day trade as much as you can. But to sum up his video, it looks like things are looking great for crypto. But if you've been following this channel, he did bring up another argument where the seasonal patterns, at least, tend to have it where the best months for cryptocurrency for movement and growth is actually October, November, and December. So there is a possibility that you should continue to wait to those months. But anyways, I did want to share this so you can kind of get the TA analysis and let me know your thoughts on this. But me personally, and like I said, I get trolled for saying this. I don't want to be repetitive, but I'm just dollar cost averaging, and I don't know if it's going to go up or down. If it goes down, I'm buying. If it's going to go up, I'm just now holding and waiting for it to go above the 850 billion market cap, and then I might start selling. July is basically when I bought crypto, and we're about to hit July, so now I can sell some of my crypto and not pay the long-term capital gains tax. But let me know what you guys think about this, and I will talk to you guys soon.